What's up, guys? JJ Fade 23. Just gonna make a quick video about the setup on Netflix for my boy Paul here. He's learning fast. I'm liking it. All right, Netflix, Google, same. Netflix and GE, same setups. So, guys, yesterday we were looking at Netflix to see what happened. It gapped up so far, it's way off the breakout level. Look, this is all-time highs. Above all-time highs, you have 950 psych level. Above that, you have 1,000 psych level. So 1,000 psych level, you could have shorted on earnings. I don't really like to short grade earnings, but that was a big gap far off the four. A lot of times, you're going to have a headache shorting against good earnings in general. I try to choose the best setup, so it's not my favorite thing to do, even if there is a big gap. But anyway, so what was on the watch list? If it didn't gap up so far, we would look for this. Let's say if it only gapped up to like right here, what we want to do is this: the stock opens, dips, we buy it, and then it pushes back up. Yesterday, the gap was too big. It was too big to buy, so what do we do? Next progression of setups in my playbook is the 10-minute EMAs. So, yesterday it gapped up. I told everybody in the room in the morning, we're going to wait till it comes down to the 10-minute EMAs. It didn't come down till the end of the day, really. Right around here, there was no trigger candle, and we're below the lows here, so I just said, I'm going to leave it. Wait till tomorrow. Now, today, we come up, we're curling right off the 10-minute 34. All right. So today today the watch list said trading Netflix long off the 10-minute EMAs. When I refer to the 10-minute EMAs, I mean the 10-minute 2134. I use them all, but when I just say 10-minute EMAs, if I'm talking about the 10-minute 8, I'll say the 8. If I'm talking about the 10-minute 50, I'll say the 10-minute 50. But if I'm saying 10-minute EMAs, 2134. So now, guys, look. You can do this on the 10-minute chart, or you can do it on the 5-minute chart, as long as you know where you are on the 10-minute chart. We know we're curling off the 10-minute 34 right here, right? You see this right here? The stock opens. When it dips and hits the 2134, and as soon as it goes back through the open price, you long with your stop below. You can put your stop below this candle or below the most recent support in 10-minute 34. Now, what I was telling Paul in the room was sometimes it's hard to see. It's the 10-minute shot, so it's open. It takes a little longer. If you switch to the 5-minute shot, now look, right? I keep the 10-minute shot up, and so I know I'm at the 10-minute EMAs right here. I'm right at the 10-minute EMAs, but if you use the 5-minute EMAs to actually trade off of, right, it's easier to see the quick wick down and reclaim of the open level, right? So you know the 10-minute EMAs right here. You also have the 5-minute EMAs right here, which are good, which it opens on top of. The setup is wicks down. As soon as it goes back through the open price, that's your long. So you're longing right here. You're longing right here, and your risk is right here or right here. I use right here. So you have that much risk. 1, 2, 3, already up 3 or 4 hours, right? But that's how you enter. As long as you know where you are on the 10-minute charts, you can switch to the 5-minute. Some people even use the 1-minute chart. I don't like to use 1-minute chart on large caps, but on a 1-minute chart, it would be something like this. It would be like an opening range breakout, right? It dips. Once it goes back through the open high, you long it right there. It's the same thing, right? 1-minute candle, you let it form, and then as soon as it breaks the 1-minute high, you go long. I just don't like to use 1-minute candles because if you can't see anything but this, if you see that, boom, big stuff, big 1-minute red candle, you're like, oh shit. It makes your brain think it's too bearish. I like to use 3-minute at the least, but 5-minute typically on large caps. So there it is. You're at the 10-minute EMAs, you're curling off of them. It dips, goes back through the open, you long as soon as it goes back through the open price with your stop below. All right. And now after that, guys, you just can have your 5-minute or 10-minute EMAs on. So look what happens. We had this yesterday's low. Look at this. We rip off the 10-minute EMAs. We pull up. Now look at this candle right here. See this trigger candle right here? This is a very, very key level. Yesterday's low. We reclaim it. We get a really good trigger candle. If you miss this entry, you can take it right here with your stop at lower day. Right? You could jam it when you're really profitable and you're doing really good. Those are the only times I would say to do things like this. It comes down, it pops up, you buy it, but you stop right below. Because that's really jamming your stop at a not really that important level. The most important levels on this chart are this high right here, this low right here, and this low right here. I always use stops that are at actual very important levels, right? Yesterday's high, yesterday's low, and this most recent support with a stock reversed. So even if I was trading this wick down right here and reclaim, I would put my stop below the low of day. Unless I was trading a strong move up flag off the 8, which that's what this is on the 10-minute chart, and only jam my stop on certain setups when I do that. But if you're just starting out, I would use a little wider stop in actual real levels. But if you're really confident, you know you're going to win your trades and you're not worried about losing 1 hour, great. Guess what? That wick's down, boom, you buy it, 196.50, put your stop $2 down, and then look, 1, 2, 3, 4, 5. That's how you get massive odds, and you don't need a super high win rate, even though we still have a pretty good win rate. But so that's the setup. And then today we also traded GE was our earnings setup. GE in the room, it was dip and rip. Why was it dip and rip? All right, let's delete this. Same as Netflix yesterday, guys. Look, GE all-time highs is right here. So there's only two. The only when we break out on earnings, the only levels that I care about is the breakout retest level or any giant psych levels that we have below the open price of today. That would be 200. Okay. So now I'm watching this at the open. The watch list in the room was dip and rip to 195 or 200 hold. So we're watching it in the room. Now we're on the 5-minute chart. This stock opens, it dips down to here. It doesn't quite go to 195. As soon as this reclaims 200, I go long. Now my stop goes at lower day, and I sold a little into the pre-market high fake breakout. If you notice, you put your if you put your this on, you'll see. I would have kept holding this with full size, but we did a fake breakout of the pre-market high, so I took a little off right here. And then after that, the next setup is what, you guys? Back to the 10-minute EMAs with the pre-market data off. If you didn't hit the dip and rip at the open, we're coming back to the 10-minute EMAs. We're waiting for it to come back. Now it came all the way back. By the way, once I took profits here, my stop goes at lower day on the rest. I'm hoping this will have continuation for a couple days on earnings, at least 2 or 3 days. If not, I'll stop the rest out at lower day, and it'll probably be a scratch trade since I had a nice sell up here and then the rest stopped out here. Whatever, we'll see. Hopefully it will start to curl up if SPY stays strong. We'll see. Wasn't really, in a perfect world, we would have came back like this. In a perfect world, on a really good earnings setup, we do a rip off the open. We come back to high or low position around here, hold the 10-minute EMAs and start to curl back up and go break out on a really strong stock. So same idea though, you guys. If you want to use the 5-minute chart instead of the 10-minute chart, you still have your levels, right? Look, it dips, wicks back, reclaims this level, go long. You can even wait for it to close if you want to be sure. Sometimes it'll come down, go back up, come back down again. Then you get nervous, so you stop out, makes a little bit nouveau low, then goes back up. It's whenever you guys, when you're trading, the more confirmation usually that you have on your trades, the less risk reward you're going to have, basically, right? So let's say you're playing a dip and rip either to 195 or to 200 and hold, which gave you the under over reclaim. But if you just long it right here on the wick down and reclaim, if you long it right here as soon as it reclaims it, yes, your risk reward is much smaller. If you wait for more confirmation for it to close, then your risk reward's bigger. Usually, more confirmation you add to your trades, the more risk you're going to have too, the wider risk, because you're waiting for more confirmation. So it's kind of like a give and take. The more you punch the trade a little earlier, jump in the gun, less risk but less confirmation, so probably a less win rate. And the more you wait for confirmation is more risk, less risk reward, but higher win rate. Right? So it's like a give and take. You kind of over the years of experience, you kind of start to see what works best for you and what setups you can not wait for less confirmation and stuff like that. So those are the two setups. I might as well just say BLBX would have been great. It was on the watch list for lower, high, short. Kind of sucks. If you notice, it didn't pop to our level, so I'll go over it real quick. BLBX had a big daily chart yesterday. Big, huge green. Big green day yesterday. Gap down today. Sometimes this can happen, guys, because as you notice, right, Let me mark my levels here. As we had level here yesterday. It stopped at fib. Didn't really stop it here. Went a little over this pivot, which is fine as long as it came back under by the end of the day. Let's see here. Um, Point is, you guys, that all right. So we had pivots here. We had some consolidation here. Another ultimate low pivot right here where it stopped. So this is what stopped it yesterday. This ultimate low pivot right here. So guys, so we had a big, huge day yesterday, and today's a gap down setup. Now I'll show you how I trade my gap downs. There's two ways that I do it, which today I kind of screwed myself. I put the 10-minute EMAs, the pre-market data off to see, all right, to see if we're gapping down below the 10-minute EMAs, which we weren't. If we're not gapping below the 10-minute EMAs, then I usually don't short red to green. I usually wait for lower high position, which if you look with the pre-market data off, you actually did come to lower high position. If this is a high right here, and you put your fibs on, and it bounces from here. No, it didn't. That's why, yeah, right here. Hold on, guys. Sorry. It would be right here, would be the swing low before the open today. So look. See how it only made it to the 50 fib? I wanted it to come up into this zone to have really good risk reward off the highs. So I'll show you now. On this, I used the 1-man chart, so I'll show you. And I usually have the pre-market data on, guys, for small caps, obviously, except for when they're pulling down into 10-minute EMAs. As you can see now, guys, look. When you put this pre-market data on, you can adjust your fibs. This was the swing low, and the swing high was in the pre-market up here, right? So look, kind of screwed us because I wanted it to go. Oops, sorry. Kind of screwed us because I wanted it to go up to here towards the 61 to 78% fib, where I have really good risk reward off of the highs. Shorting at $6, risking 65 cents, and then it tumbles. Instead, we got a stuff into red to green area. Red to green area was right here. It's a great trigger candle. Really, really good trigger candle right here. But I just wasn't quick enough to see it stuff red to green. I was looking at a lot of things and wanted it to come up here. So I really wasn't paying attention until it got closer, and then it stuffed so fast. I could have taken it right here in the lower high. As you see, again, you guys, once you got the stuff trigger at red to green, that's a stuff at a key level. And then lower high position right here, 61 to 78% fib. Then you risk off of the high of day right here, which I could have done that, but I really was just hoping it would go a little higher. So that was a great stock on the watch list, which gave a really good trade. I just missed the entry, unfortunately. And you know what happens when you miss the entry on a trade? They usually just unwind beautifully. So what are you going to do, right? Came all the way down to 360. And why did it come all the way down to 360? Because why? Because the daily 4, guys. Remember, stocks come off the 4, they come back to it. They come off the 4, they come back to it. Pretty much every stock in the universe, when it comes off the 4, comes back to it. They can grind around the 4, they can grind up the 4, but when they come off it, they come back to it. They come off it, they come back to it. They usually come back to it within that day or the next. Look, comes off it, comes back to it. Comes off it, comes back to it. The 4 is such a short-term EMA that stocks can't stay off it very long, no matter what stock. I say this all the time. You can put on any stock you want in the world. Pick a stock. NIVDA, I don't care what it is. Any stock you want in the world. Look, anytime you get an extension off the 4, it comes back to it. Comes off the 4, it comes back to it. When there's a gap in the chart off the 4, comes back to it. Comes back to it. Comes back to it. It comes back to it either the same day or the next day. There's not many stocks that stay off the daily 4 very long because it's just the way it is. Look, grinding up the 4, riding up the 4, gaps off it, comes back to it. Big dump off it, comes back to it. Push off it, comes back to it. Big gap down. Big flush, comes back to it, comes back to it. Big dump, comes back to it. Just the way it is, you guys. Once there's a gap in the chart after 4, you can pretty much look to short that, right? So if you need something to figure out, instead of you just like, oh, it's up too much, is it? Like if the stock's going like this, 1, 2, 3 green days, is that a great short? No, there's no gap in the 4. Once you gap up off the 4, then it's okay to short. Look, trending higher, trending higher, trending higher. No gap on the 4. Gap up off the 4, comes back to it. That's how I use to help me judge my shorts on anything, or longs too, right? For that example, we went long yesterday on Apple. Why? Look, gap in the chart and down at support. So Apple came down to support. We had a gap off the 4. We longed it back to the 4 and back to the gap fill. I'm still holding that. See if it's going to come back and stop me out. I make a big move. But point is, guys, look, going. Big spike off the floor, comes back to it. Gap off, comes back to it. Flush comes back to it. For reversals, it's one of my main indicators that I love. You add that with key levels, and you're all set. If you get a big gap up into resistance and you're off the four, perfect. Big flush off the four into support, long off the four. Doesn't matter what chart. Look at this. Gap down, huge gap down. What do you think's going to happen? Look how far it is down here. Look how far it is down here. Apple. Look at that. 7% off the four. What do you think? It's going to just keep going lower? Not likely. Anyways, yeah, so that's my video for today. Thanks, guys. By the way, sorry, I'm using my laptop, so don't mind the OBS. I had to only have one screen on my laptop.